Well, if you've been watching the dollar, you know that it's been dropping to record lows. It's been plagued by this fight over the U.S. debt limit and also the deficit battle. For more, we are joined by Bloomberg Best and Head of Currency Strategy at Wells Fargo, Nick Bennenbroek. Nick, a familiar face on our program. Good to have you back.
Good morning. Good to see you.
So no relief for this dollar as long as we've got this stalemate going on, right?
Very much so. I mean, it's hard to know what's going on behind closed doors. Publicly, at least, the comments don't look too encouraging right now. I'm sure we'll come to a conclusion, but while this uncertainty remains, the dollar for sure is going to keep going down, I think.
I mean, is it going to rebound though quickly if, let's say, we get a debt deal passed? I mean, is that what you're looking for?
I think probably we'll see, what you would call a knee-jerk reaction. I think some of the dollar weakness that we're seeing right now is because of the concern that we won't see a debt ceiling increase per se. So if we do get an agreement, I think we will see some recovery in the dollar. I don't think what we're seeing now in terms of the weakness of the dollar is necessarily related to the possibility of a credit downgrade. It's more a concern that a deal doesn't get done at all.
How come? Why not related to the downgrade?
Well, again, I think there are two elements to this. One is, will we see the increase in the debt ceiling and what would be the ramifications of that for the default? And that's the greatest concern. That's like the primary concern. After that, you've got the issue of the credit downgrade. And again, I think most of the dollar weakness is really related to that really quite unsettling and volatile scenario that would be what would happen, if we didn't get any increase.
Nick, what a lot of people have been talking to us about is that, much of what you're seeing happen in Washington is actually affecting the dollar out of all the assets that we've been talking about. Why the dollar so much?
Well, it's a good question. I think arguably, it's a 24-hour market, 5 days a week. It's very, very liquid as well, and it's also very easy to get in and out of. So, that's one reason why perhaps you're seeing the impact on the dollar. But you should perhaps also be seeing more of a reaction at this point in the Treasury markets, and you're not seeing much of an increase in those yields yet. So,
and why do you think that is?
It's, I think, as some people have said, when we talk about treasuries, and I think something like 50% of the world's AAA securities are in US treasuries,
right,
or get debt that's guaranteed or issued by the government. There's not really too many alternatives. With the dollar, there is at least some alternatives. The euro, the yen, some of these other currencies as well. So perhaps that's why you're seeing the reaction in the dollar.
So treasuries are presenting more of a safe haven than anything else than the dollar, which has been somewhat through this past crisis, but not really now. No,
the dollar's behavior as a safe haven currency is actually somewhat unreliable during this latest phase of the crisis, particularly in 2011. At times it displayed those safe haven characteristics, but at times markets have been volatile, markets haven't been performing well, and you've seen that it's been the yen and the Swiss franc rather than the dollar that have done the best.
So if we continue to see, though, problems here and, extending maybe even beyond next week, where's the dollar going to go? How low is it going to head?
Well, I think we could see there's a possibility we'll see the euro back above the 150 level, possibly, again, based on whether we get a credit downgrade or not. It's perhaps not the end of the world, it's not an extreme scenario, but there have been instances where AAA countries have been downgraded from AAA to, AA+, and we've seen generally in the 6 months afterwards a 3 to 5% decline in those currencies. So,
is that what you might expect for the dollar?
I think you probably expect something like that for the dollar. It's certainly negative. I don't think it's going to be a collapse 10, 15, 20%, but you could easily see 5%, and that, as I say, takes you to 150 on the euro. Perhaps it even takes you to a new record high on the dollar-yen rate, down to even 75.
The Treasury wouldn't let that happen. A 10, 15% decline in the dollar? No, right?
No, I think, obviously the Treasury wants a strong, stable economy. They would prefer a stronger dollar. But I don't know if they necessarily strongly resist a decline as long as it was orderly.
Orderly, right. We've heard a lot about that with all the currency wars that have been going on in the last 12 months. Nick, thank you very much. Really appreciate it.
Thank you.
And your focus on the dollar this morning. Nick Bennenbroek of Wells Fargo.